Welcome to the world of fraud and forensic basics. How do auditors uncover deception in financial records? By mastering the essentials of fraud detection and forensic accounting. Dive into the intricate web of deceit and learn the art of unraveling financial mysteries. From uncovering hidden assets to tracing illicit transactions, auditors play a crucial role in upholding financial integrity. Let's decode the secrets behind the numbers and shine a light on the truth that lies within. Explore the fascinating realm where numbers tell compelling stories, and every detail matters. Join us on this journey of discovery as we navigate the complex terrain of fraud detection and forensic accounting. Stay tuned for insights that will sharpen your investigative skills and enhance your auditing prowess. Remember, in the realm of fraud, truth is often stranger than fiction. Welcome to our course overview. Today, we delve into the intricate world of fraud detection and investigation. Have you ever wondered why fraud occurs? We'll explore the fraud triangle, uncovering the driving forces behind every fraudulent act. Moving on, we'll sharpen our skills in recognizing fraud red flags, essential for spotting irregularities in various business functions. Embrace the power of data analytics tools, your key to uncovering hidden patterns indicative of fraud. Finally, we'll navigate the investigation process, equipping you with the systematic approach needed to respond to suspected fraud effectively. Stay engaged as we journey through these crucial topics, empowering you to combat fraud in your professional realm. Fraud detection is a critical skill for auditors and accountants, given its staggering impact on organizations. Annually, fraud costs businesses billions and tarnishes reputations in an instant. The Association of Certified Fraud Examiners reveals that fraud siphons off about 5% of revenue every year. Your role in safeguarding businesses from financial crimes is pivotal. Understanding fraud goes beyond catching culprits, it's about prevention, fortifying internal controls, and upholding financial integrity. Your adeptness in spotting and addressing fraud risks will elevate you as an invaluable asset to any organization. In a world where fraud can wreak havoc, your vigilance will be a shield against financial pitfalls. Ever wondered why trusted employees turn to fraud? Enter the fraud triangle. Conceived by criminologist Donald Cressy, this model unveils the three critical factors that must align for fraud to rear its ugly head. Picture this: pressure, like financial strain, meets opportunity, born from lax controls, and rationalization, the mind's justification for deceit. Auditors use this model to pinpoint fraud risks and craft robust safeguards. In essence, understanding the fraud triangle is key to defending against deception in the workplace. What drives someone to commit fraud? Pressure, personal financial struggles, unrealistic targets, greed, or external expectations. However, pressure never justifies unethical behavior. Fraud becomes possible through weak controls, poor oversight, and complex transactions. Auditors play a crucial role in addressing these vulnerabilities. Fraudsters justify their actions through rationalizations like borrowing or feeling entitled. Rationalization allows them to maintain a positive self-image despite dishonest actions. Remember, pressure, opportunity, and rationalization create a dangerous triangle that can lead to fraud. In a chilling real-world example of the fraud triangle in action, let's examine the case of Sarah, the dedicated bookkeeper. Faced with overwhelming medical bills following her husband's illness, Sarah succumbed to the perfect storm of pressure, opportunity, and rationalization. With unchecked access to financial controls, she justified her actions as a temporary loan to weather the crisis. Over 2 years, she embezzled $350,000 before detection. This case underscores the importance of preventive measures: segregate duties, conduct regular reviews, enforce vacation policies, and implement surprise audits. Trust can be deceptive, and vigilance is key. Remember, in the world of fraud, opportunity favors the prepared. Fraud detection hinges on identifying red flags, warning signs that hint at potential wrongdoing. While not definitive proof, these indicators demand closer investigation. Auditors must adopt a critical eye, probing abnormal behaviors that deviate from standard business practices. Red flags come in various forms: behavioral cues like avoiding time off or living lavishly beyond means, documentary markers such as missing records or dubious adjustments, and analytical signs like irregular transaction patterns or unexplained financial shifts. Stay vigilant for these telltale signs and remember, diligence is key in uncovering hidden truths. Ever wondered how to spot red flags in financial audits? Let's delve into the key areas to watch out for. In revenue and receivables, keep an eye out for revenue recognized before delivery, unusual credit memo activity, and sales to related parties. Inventory discrepancies may arise from physical counts not matching records, frequent write-offs, or restricted access during counts. When it comes to purchases and payables, be wary of vendor addresses matching employee addresses, duplicate invoice numbers, and round dollar payments. Payroll anomalies could include excessive overtime claims, manual adjustments, or ghost employees on the payroll. Cash and banking concerns may manifest as unexplained transactions, missing checks, or unusual cash shortages. Lastly, in financial reporting, stay alert for frequent policy changes, unusual journal entries, and undisclosed related party transactions. Stay vigilant to ensure financial integrity and transparency. In the world of fraud detection, data analytics reigns supreme. Why? Because while traditional methods only scratch the surface, data analytics dives deep into every transaction, uncovering hidden patterns and anomalies. By processing vast datasets swiftly, technology flags potential fraud, shifting detection from reactive to proactive. This proactive approach sniffs out schemes early, preventing substantial losses. Imagine having the power to analyze 100% of transactions, catching fraudulent activities before they escalate. Data analytics in fraud detection is not just a tool, it's a game changer. Ever wondered how data analytics can uncover fraud schemes? Let's dive into some powerful techniques. Filter and sort transactions to catch suspicious patterns, like payments just shy of approval limits. Apply Benford's law to detect anomalies in expense reports. Visualize relationships between vendors, employees, and transactions to expose hidden connections. Analyze trends against historical data for unusual spikes. Detect duplicate transactions and gaps in numbered documents that may hint at fraud concealment. Stay vigilant, as these techniques reveal intricate schemes lurking within the numbers. Have you ever wondered how data analytics can uncover vendor fraud schemes? Imagine sifting through 15,000 transactions to pinpoint just a few suspicious cases. It's a targeted process. Filter for employees sharing addresses with vendors, flag round dollar payments, verify tax IDs. Manual review then zeroes in on 12 high-risk vendors. This meticulous approach saves time and boosts fraud detection. In a sea of data, analytics becomes the compass guiding auditors to the heart of the matter. When fraud raises its shadowy head, auditors leap into action, embarking on a meticulous journey through the fraud investigation process. Step by step, from analysis to detection, they unravel the mystery, collecting evidence, planning, assessing, and ultimately unveiling the truth. Each stride forward builds a sturdy bridge to understanding who, what, and how to shield against the next strike. Detecting fraud is just the beginning of a complex investigative process. From the initial alert and careful assessment to meticulous evidence gathering and strategic planning, each step is crucial. Assembling a skilled team, preserving evidence, conducting thorough interviews, and ultimately presenting comprehensive findings are key to resolving fraud cases effectively. By following these detailed investigation steps, organizations can not only uncover the truth but also strengthen their defenses against future risks. As we delve into critical investigation considerations, it's vital to navigate the legal and ethical landscape with precision. Engage legal counsel early on to ensure alignment with employment laws, privacy regulations, and evidence protocols. Uphold confidentiality diligently to safeguard the innocent and preserve evidence integrity. Remember, refrain from premature accusations, employ terms like alleged or suspected until conclusions are firm. Embrace key principles, uphold objectivity, maintain confidentiality selectively, document meticulously, secure the chain of custody diligently, foster professional skepticism, and ensure legal compliance consistently. In essence, the path to successful fraud investigation lies in unwavering adherence to these foundational tenets. As you prepare for interviews and fraud investigations, thorough groundwork is key. Review evidence, craft factual questions, choose a neutral setting, and aim for 2 interviewers. Build rapport, set ground rules, and delve into the subject's role. Transition from broad to specific inquiries using open-ended questions. Actively listen, observe body language, and embrace pauses for added insights. Document details meticulously, seeking consent to record and confirming key points in a signed statement. Capture any evidence provided. This meticulous approach ensures a comprehensive and effective interview process. How can organizations stay ahead of fraud rather than just reacting to it? By investing in a robust anti-fraud program. This proactive approach not only reduces fraud losses but also speeds up detection. To achieve this, organizations need to focus on 3 key elements: strong internal controls, ethics training, and a whistleblower hotline. These components, along with surprise audits, background checks, and a tone of ethical leadership, create a solid defense against fraud. Remember, prevention is the key to safeguarding your organization's integrity and resources. As an auditor, your role is multifaceted and crucial to ensuring financial integrity. Professional skepticism is key. Always question, verify independently, and stay vigilant for signs of fraud. Your ethical responsibility demands reporting suspicions and upholding objectivity, no matter the circumstances. To excel in this field, embrace continuous learning to keep up with evolving fraud schemes and detection methods. Sharpen your technical skills with data analytics and forensic investigation techniques, while nurturing soft skills like effective communication and critical thinking. Cultivate a mindset of skepticism and consider pursuing certifications like CFE or CR.FA to showcase your expertise in combating financial crime. Remember, vigilance and ongoing development are the pillars of a successful fraud auditor. Takeaway: vigilance, continuous learning, and honing a skeptical mindset are essential for effective fraud auditing. Ever wondered what fuels fraud? The fraud triangle reveals all: pressure, opportunity, and rationalization. Auditors tackle weak controls to thwart these schemes. Keep an eye out for red flags signaling deeper scrutiny is needed, behavioral cues, document discrepancies, and data aberrations. Dive into the power of data analytics, uncover hidden patterns and anomalies effortlessly. Embrace a systematic investigation approach: detect, assess, plan, gather evidence, analyze, and report. Stay objective, document meticulously, and involve legal counsel early. Detect, analyze, report, it's the key to uncovering fraud secrets. In Scenario 1, Maria's behavior raises serious fraud concerns. The elements of pressure, opportunity, and rationalization are evident in her actions. Red flags include her refusal to take vacations, defensive behavior, and sudden lavish lifestyle. To start, analyze bank transactions and compare income against expenses. Moving to Scenario 2, the payments to ABC Consulting Services hint at potential kickback schemes. Seeking detailed invoices and service agreements is crucial for uncovering the fraud. The weak approval process and lack of proper documentation point to internal control vulnerabilities. In Scenario 3, discrepancies in inventory counts and missing receiving documents suggest possible inventory fraud. Look into the missing paperwork and conduct a thorough review of inventory records. When interviewing the warehouse manager, focus on inconsistencies and discrepancies. Remember, vigilance and thorough investigation are key to detecting and preventing fraud in any organization. Timing: approximately 40 seconds. Takeaway: stay alert to red flags, investigate thoroughly, and strengthen internal controls to combat fraud effectively. As we wrap up this audit, we come across a troubling case: the payroll scheme. Within this retail company, red flags abound: shared bank accounts, excessive hours, missing W-4 forms, suspicious addresses, and unapproved payroll adjustments. Tom, the long-standing payroll manager, operates without oversight. What elements of the fraud triangle are at play here? Pressure, opportunity, rationalization? Our investigation plan must be meticulous, analyze additional data, review documents, and interview key players. Should fraud be confirmed, we'll recommend robust control improvements to safeguard against future deceit. Takeaway: vigilance is key in preventing payroll fraud.